Turnaround Tuesday, everybody. Hey, Froggy, get out of my throat. How are you guys? Hello, Face. Hi, Zig. Tomas, Vinod, everyone doing okay? Hello, Forex Gal. Did you get my 8x10 autograph picture? Sent it. Oh, kiss to you, Zig. My trading warrior brother. So it's Turnaround Tuesday, right? You guys want me to take a guess with a potential Turnaround Tuesday candidate? Give me a Y if you want me to take a guess. And remember, this is not a pattern in play, okay? Just a Nostra Pinkert. Okay, so I think a lot of people are getting tired of top picking the dollar and trying to bottom pick the euro. So I'm thinking between here in the Dixie 96.20, get some kind of reversal. I'm not looking for a home run ball. But it is possible that we could pull back, and if we take out 5.5, we could head towards 95. So that's my guess. It's a little lower beta. Basically, the bet is that we get one break here before we take out the 97 high, if that's, you know, what the plan is. Everyone with me? So, you know, you could use an 80-point stop in the dollar index. All right. Even though you want to, you know, what I teach is if you have 20, 30 pips your way, no audio, it must be just for you, Dennis. Can everyone else hear me? Team?
I can hear you, Dale. Good morning.
Okay, buddy. All right, so I would tell Dennis to, good morning, tell to log out, but if I, you know, once I said that to someone, Blake goes, well, how can he, if he can't hear you now, how will he know? How could he hear you to log out? Anyway, so that's it in the Dixie for potential Turnaround Tuesday. I do want to point something out, and you know, you didn't know if it was going to happen because we had a turn in the S&Ps. They you know, brought it back pretty good, but this 2878 level is important because, you know, a lot of people are calling it was a breakout, right? It was a breakout over the earlier highs. And, you know, we've tested it quite a few times, you know, tested it down here, rallied, made a new high, tested it here, and see how it fought back. That was Friday, and fought back all day yesterday. And here we are, you know, trading underneath it. I don't know, it looks to me like the S&Ps could move back to this median moving average. It's a daily 200, it's 2768. Okay, so that's something else I see. Let's see. The yen, you know, like I thought it would, talked about it last week. It got back under the throw over, you know, with the big sell-off in the market here. You know, this was a throw over, took it out. I have a lot of confluence up here. I'd look to be a seller in the yen up here at 113.60, 113.70. You know, pick your money management stop. But I don't think this is it. I think this might just be A, B, C for A, and then we get a B wave up here. I think this would be about halfway back. And then we head back down towards 12, maybe even 1170, which is really the key for the yen. That's really where it started to accelerate. So inside day in the yen. So looking for shorts there. Metals, I don't know anymore. I'm a little confused, and not because of the metal action. You know, we're bouncing a little bit. But I'll show you something I haven't seen in a long time. Here's the gold. You know, we had that big smash here. Maybe it's setting something up inside day here. And silver, you know, is it going to put in a right shoulder or a third drive? I don't know, but something that makes me not want to short them, or this is something different in the markets I haven't seen. So just remember this day in the gold, right? We were down about 17 bucks. The action in the miners and the ETFs, they did the opposite, and they usually don't. So, I mean, we had them come back with the market all day. So, you know, it looks like we might be carving out a right shoulder. This is one of the miners. This is the blue chip miners. These are the seniors. They look so much better. For a while, they looked worse than the gold, but they look so much better. And the two alternatives I had was, you know, I thought we could have some type of bear market rally in gold, but the alternative was I thought that we could maybe even have a third drive to a bottom here in some of the miners. But yesterday was a pretty unusual day. Let's see if it was a one-day wonder or not. But that's what you want to see if you're a precious metal bull. You want to see days when the gold is down and the shares are holding even up, okay? Because you want leadership coming out of the miners instead of the bullion. That would be a real tell and market message that there's a turn at hand, because that's kind of the leadership that I consider more bullish, is when the shares lead the way to the upside. Okay. So, you know, I just want to bring you back to this, guys. Is Face helping you out? Who thinks that Face has been a nice addition to their daily routine of covering the markets and getting ideas, intelligence gathering from the team? And we are going to have, I think, Greg and Andre here today with Steve and Stel. Give me why Face has been a positive influence in your trading life. Tom, it has. And I think most of you guys are already subscribers. So that, have you guys watched Amanda trade live in the chat room? And now you have to be a member to hear Paulie's inflection points and his rundown of the bias chart. So if you haven't signed up, at least give it the trial a shot. I've made this offer all the time. You know, no one's taken me up on it. If you don't like the trial after 10 days and you really feel like you really misspent that $1, you know, send me an email. I'll mail you $1. It'll be postage due though, okay? Also want to mention Forest Park. If you need to have a better situation for your trading, trading's tough enough without having to fight with your broker. So if you're fighting with your broker, you have to go talk to Trent and Justin. And in fact, I believe Trent is going to be with us. Look at this team. You know what? We could take on the Yankees. Put us in the playoffs. Never fade Amanda. Yeah, put us in the playoffs. Here's our pitcher, Paul Franco. Okay, I'm the coach of the team because I used to be a player, but I'm too old to get on the field. And Blake, he bats clean up. Greg is our shortstop and leadoff man. Stelios is our catcher. Nothing gets past him. He'll catch every call, resolve every problem. Steve is our bats third, plays third base. He's our Iron Man. No one works harder on the field than Steve. Joe is a pinch hitter. We only bring him in clutch situations, like going on TV. I'm Satchel Paige. Okay. Amanda's our bat girl. The fans come not to see the ball game, but check Amanda out in her Batgirl outfit. And Andre, oh yeah, Andre's a switch hitter. Yeah, and you're right. She does. That's what all good mothers do, Natish. And Andre bats, he's a switch hitter, played center field for us. He diagrams the outfield with harmonic patterns, and nothing gets past Andre. So go team go, sign up with us. You have all of this brain power coming to you, being pushed through alerts all day long. You'll know if support resistance is breached. And that's the end of my pitch. But you know, you have to not only take, you have to give, and that's what makes it symbiotic rather than parasitic. So let's have a give and take relationship. We're given, and your best way of saying thank you is to become a subscriber and part of our FX family. So Steve, how you feeling today, brother?
Hello.
Hey, Coach.
Hey, Steve
Hi,
here.
Stel.
Oh, he's here.
Hey, Stel.
By the way, Coach, I love it when you use Greek words like symbiotic. You're so good.
Yeah.
Yeah. Oh, yeah. All the great words are Greek. You know, really. I mean, you know, and they're so descriptive, and they're melodic too. I've noticed. You know, I'm kind of a musician, so yeah, I love your language. Even translated to English, it sounds good. So, Steve, what do you think? Don't you think people are getting tired of trying to bottom pick Euro now, and maybe it's due for some type of reaction here?
Yeah, we'll need to find out, but you know, there is no doubt that it still feels, you know, quite heavy. Today we seem to be breaching the 1460 support area, and you know, this opens the possibility for another retest of the 113 area. I do think that, you know, as long as we stay, and you know, the previous bounce that we had that just lasted 2 days is, you know, it's not an indication of of a strong market. It's rather an indication of a weak market. So, you know, this far, we have to keep respecting, you know, the dollar rebound that we have in hand, right?
Yeah, yeah.
Until the market, you know, gives us something else to ponder with. So now the question is, what's going to happen if we keep seeing? I mean, now the indices one by one are starting to get on like critical support areas, and you know what happens because we're just like one more push away from some critical breakdowns to start taking place. So
let's see your Picasso charts, your Rembrandts.
Sure.
Let's see your Rembrandts, Steve.
Absolutely. Pass me the screen.
I hardly. Oh, you want me to pass it to you? Because I hardly, you know, draw lines because my hands shake when I'm using the.
I just passed it to you, Steve.
Oh, okay. Still help me.
I have it. I have it.
All right.
I have it. By the way, before we do that, a couple of fast comments. One, Blake is going to be with us again starting tomorrow because, you know, he was on a short vacation, well-deserved one actually, because, you know, he is like a machine. I mean, he wakes up in the middle of the night as you do, and he's not over until like night.
Yeah, he goes longer than me. So young compared to me. Oh yeah, I have one announcement for you and Stel. It's CK time.
CK time?
Yeah, you know.
I'll be flying.
All right, I'll be back.
I'll be flying.
All right.
Okay. A couple of things before you
Absolutely.
start.
Oh, by the way, one more comment. There is a very good chance that Greka is going to join us, you know, in like 15-20 minutes from now. So, you know, if he makes it, if he doesn't have any traffic, he's going to be with us for the last part of the webinar, so we can also get his insights. Stelio, go ahead. Tell us what you have to say before we go.
Yes, only a couple of things. Not much has happened overnight. One is that the IMF has cut the forecast for global growth from 3.9% to 3.7%. It's a small cut, but still, you know, it reflects the dangers that are slowly arising from potential trade wars, from oil, you know, going higher, and and the dollar slowly rising, which inevitably will bring some kind of a little bit of not trouble, but you know, it makes emerging markets a little bit jittery when that happens. So that's what the IMF did. Then the other thing we had was a little bit of talk again from the Italian front, and you know, unsurprisingly, they like speaking. So so basically, the EU commissioners Moscovici and Dombrovskis, they said that you know, they don't like the fact that there's a deviation between what Finance Minister Tria had proposed for the deficit, which was 1.6%, and what's kind of been agreed now, which is 2.4%. And you know, they expressed their displeasure about that. Obviously, there's not a lot they can do about it, because Italy will ultimately, they will decide what they're gonna go for. But that's what happened. And then Tria himself this morning, he I can't remember where he was speaking, but he basically mentioned the fact that the spread between bonds and BTPs, the Italian government bonds, is over 300 basis points. And he actually said that, you know, if it goes to 400 or 500 basis points, then we will have to do what we have to do, kind of, you know, like a warning. So I think he inadvertently had told us now where this spread is heading in the next few days.
Well, wait a second. What is your interpretation about we will do what we have to do? He's going to take his water pistol and start like.
That's a good question.
What is he going to do exactly?
They can't do much, you know. They don't have their own currency. All they can do is issue more debt, or you know, I don't know, or you know, do something a bit more drastic. But really, I can't.
Issuing more debt will actually
make it worse. Exactly.
Yeah. So the only thing they can do if it reaches 400 to 500 basis points, which, as indirectly, implicitly, you just said, is that once he says that, you know, this is the line in the sand, it's like inviting, you know, the markets to get to that level, right? So once we get to that level, there is only one thing only that they can do that will actually help it, is take back or change what they've already declared they're going to do, let's say having to do with deficit and the fiscal policy moving forward. So unless they're willing to do that, which they will have to do if, you know, that's what he says, that, that's the line in the sand, then what exactly can they do? Because that's, you know, completely empty words, right?
That's why I said issue more debt, because they can't buy any more debt. So I was joking when I said, you know, they can issue more debt. They can't do anything else, right? Yeah. So you are right. They are either going to renegotiate on this or what? I don't know.
Yeah, or what? Yeah, exactly. Or any other alternative. There are a lot of or whats, but every other alternative is just going to make the spread go wider extremely fast instead of the opposite. So, right?
Yeah. Absolutely. So
now a little comment about what you mentioned, and then we can go over the charts. You mentioned, in essence, indirectly, you mentioned the crowding out effect, that when the dollar goes big, the emerging markets suffer, and the emerging market currencies suffer. I just want to clarify here for those that don't know. There are two reasons that this happens, right? One reason is because a lot of the emerging markets are issuing a big part usually of their debt in dollars. And the reason they're doing that is because they want to attract creditors. And if the creditor has also the anxiety of the exchange rate risk, they are less likely to actually, give credit to any nations. That's why they're forced to issue a lot of their debt in dollars. So when the dollar goes up, in essence, the debt of those emerging market countries increases, right, in local currency terms. So that's one of the reasons. The other reason is also the crowding out effect, meaning that you know, when the US is running bigger deficits like the US is doing now, there is more global need for credit. And, you know, the vast majority of the creditors are a lot more willing to in essence, lend money to the US, especially now that yields are going up, than taking a risk with emerging markets. Personally, I believe that this, which is like a solidified, view of the market, eventually, sooner rather than later, is actually going to change. And what is considered now a standard and the given that, whoa, why shouldn't I, you know, lend my money to the US and buy treasuries instead of, you know, somewhere else? I think that, you know, that's going to be tested sooner rather than later. And, you know, that we might see a big shift in what the market considers, you know, a safe investment and whatnot. But we're not there yet, right? So let's go back to the charts and see what the markets have been doing overnight. I have to say that obviously the dollar has strengthened somewhat. There is no question about it. The euro, as I said before, is testing. Let me zoom in. There we go. So the euro has been testing, and it seems to be breaking below this horizontal support area. As you see, it was good enough to just, you know, create a couple of days of a rebound. And, you know, there doesn't seem to be any real support until we reach this 113 zone once again. But most importantly, if we zoom out, don't forget that there is also a trend line of importance coming, you know, a little bit lower than that. That is, if I zoom out, you can see here, there was a channel that actually kept Euro USD capped from the beginning of 2015 until the summer of 2017, when we finally broke above it. So, you know, the retest of this channel might actually also provide support. It currently passes a little bit below 113. As you see, Gregor has also spoken about this. There is also a potential of a big head and shoulders formation here, right? It's not so hard to distinguish it. So obviously, we're not there yet. I mean, you know, the neckline is obviously in this case lower than where we currently are, but the big picture is that there is the possibility of a bigger breakdown. Now, you know very well that I'm not bullish the dollar in the medium to long term, but, you know, timing events based on macro views is not something that you should ever be doing. So, you know, my macro view is a totally different thing than with what I would want to do in trading, because, you know, there will come the time that the macro thesis is going to align with the technicals. But, you know, once you're trading in the short to medium term, you have to trade using the technicals. Now, when the technicals happen to align with your macro view, then you can trade bigger positions, because then you have a lot more conviction that you're in the right side of the market, right? But until, you know, we get there, obviously, you know, you need to respect dollar strength at the moment. The same thing applies here with the cable. The cable seems to have been correcting higher within an expanding triangle. 133 was a key triple confluence of resistances. We got rejected from there. Now, you know, the only thing that's holding this corrective move higher from actually coming to an end is this ascending trend line support. If we do break below it, you know, the more the days pass, the more it also converges with the horizontal support area at 130. I believe that once we get a break below there, the chances that we're going to see lower prices than the previous low at 126.60 are extremely high. Now, as long as we're holding above there, there is always a chance that, you know, we're going to push towards 133 once again. But unless I see 133 breaking to the upside, I have to respect the downtrend, and we have to, you know, trust the trend, because, you know, it's more often right than wrong following the trend. And, you know, that's a statistical and mathematical proven fact. The same thing applies with the Aussie. I mean, there were several occasions in which I believe that the chances that the Aussie is going to finally put on some big rebound are high, but, you know, I never got trapped being long simply because, you know, we never broke above this like descending channel. So, you know, it's one thing saying, okay, it's due for a rebound, and another thing actually seeing the confirmation that the rebound is coming. So, you know, so far we got another rejection from here. As you see, the Aussie remains very heavy. Yesterday it rebounded slightly due to the cut of required reserve ratio in China. But so far today, we seem to be even retracing that little rebound, so nothing has changed. The next downside target is the 127% extension of the last rebound higher, which comes at 70 to 24. And, you know, I always prefer the 161.8 extension. That comes roughly at 69.43 cents. So, you know, potentially more downside coming before a big rebound here in the Aussie. The same thing applies with the Kiwi. Kiwi approaching a very nice confluence of supports, a triple confluence of supports likely. It's the 161.8% extension of this little last rebound, the 161.8% extension of this big rebound that we had here at the end of last year and the beginning of this year. And as you see, there is also a well-defined descending channel. All of them seem to more or less confluence at the moment, roughly at 63.75. So why not? This looks like a good area to act as a magnet and at least see the pair reach that area. Obviously, as I've said many times, you know, it's a nice downtrend for both the pairs, but that doesn't really change the fact that, you know, it's a mature trend. I mean, you know, it's quite dangerous trying to sell down here. I would rather see a big rebound first before actually attempting, you know, to short again. Now, there is another pair that's quite interesting, and it's the Kiwi yen. I'm not going to mention the Aussie yen because between the Aussie yen and the Kiwi yen has a much more clean technical picture. So if you're looking, you know, to get involved with one of those commodity currencies against the yen, I think that the preferred choice should certainly be the Kiwi yen. The reason is that, first of all, we have a clear descending channel that the market has tested several times. So it's more than obvious that it is of importance that the market respects it. And the second reason is because we also had already like a double bottom here, and we are approaching this level once again. Now, there are occasions, of course, that we've seen triple bottoms, but statistically speaking, that's not very likely. So, you know, a third retest has a higher chance of failing than the first time we retested this level. Regardless, we're getting close to this. I'm very interested to see what's going to happen from here. I would consider it, you know, a decent likelihood that this time, one way or another, we're going to actually breach below it and, you know, get ourselves down to 71. But regardless, paying attention to this channel is interesting, and I think some kind of a trade can come up in the near future from here, either from seeing a rebound from this area or even a retest of these channels support. If I see some kind of a reversal from there, I would be interested to trade it to the opposite side for at least, you know, a period of a few days. Now, I mentioned that a long time ago. This is the USD CNH, and this is exactly what we drew back then. Like several days ago, I said that, listen, you know, this looks like a triangle to me, and, you know, I really doubted that the USD CNH is not going to actually it's going to be prevented from breaking high, and this seems to be the case. Of course, there's always a chance that this is going to prove to be, let's say, a flat top triangle, in which case we might find like a resistance in the previous high and then consolidate a little bit longer before we finally break higher. But in either case, I would be expecting higher prices to follow. Okay, so I think that this market clearly points to sooner or later seeing the pair trade above the psychological level of 7, with whatever implications that has for the rest of the markets. We know that it definitely is not a risk positive development. Most likely it's going to act as a risk of development. Now, speaking about risk, let's first go to the USD yen, and then we can start having a look at the indices, because they start to get more interesting by the hour. So beginning by the USD yen, first of all, the USD yen has broken below after slightly overshooting this ascending channel. It has now been trading since yesterday below it. It's barely trying to hold this previous high at 113.17, but it looks quite heavy. I showed yesterday that on the 4-hour chart we had a head and shoulders formation breaking lower. Here it is, and the target is, we haven't yet reached the target. It's down at 112.59. So I would assume that a little recovery, perhaps even towards the 113.50 area, is going to be sold by the market for at least one more leg lower towards 112.50. So I think that at least in the short term, the USD yen's rebounds should be sold. Now, let's have a look at the indices one by one. Stelio, let me know if Grega.
Actually, this is very good time, because our friend Dave is asking about the IWM. So if you're looking at the indices, maybe have a look at that.
Yeah.
Yes, and if Grega comes in, I'll let you know straight away, of course.
Okay, yeah, and as you just did, any relevant questions to whatever I mentioned, just give them to me straight ahead.
Yes, sir.
S&P. I love the fact that S&P keeps trading in a very technical manner, right? We found a high, we retested that high twice. We took like 4 or 5 days to actually make it below this ascending trend line support, which in essence confirmed the significance of this specific trend line. When we finally broke below it, we did accelerate, showing that there was some fight from the bulls to actually hold that line, but once they failed, some of them just quit and cut off their positions, which probably created this abrupt move towards this horizontal area of support. And as you see, this is already the 3rd consecutive day that we're testing this support, and once again we see there is some strong defense of this level, right? So in my mind, there is absolutely no question that this is an area of importance, and for the same reason, there is no question in my mind that once this level breaks, if it does, so let me be very specific here. If you're bullish the S&P in the short term, this is the place you're buying, because you obviously have a very tight reward to risk ratio. You see how strongly this 2860 to 2870 zone is being defended for 3 consecutive days. So you can be long here, risk very little, and hope that the bulls are actually going to make it, in which case you're going to see some type of a rebound. In this case, the first area of resistance would be at 2,900. On the other hand, if we see this level breaking to the downside, there is some little chance that this ascending channel support is going to hold. Personally, I doubt it. I believe that the vast majority of the ammunition will have been exhausted in the defense of this ascending trend line, and then the defense of this horizontal support area. I think if this also gives way, there is a very, very good chance that we're headed towards 2790, which is another very, very well-defined level of support. So that's my view on the S&P. Now, having to do with the NASDAQ, I already said NASDAQ has already breached. I like several things about the NASDAQ. First of all, you can view this as a double top, right? Because more or less it is a double top. Second of all, if you want to go down in more detail, you can notice that briefly, we actually breached 2 new all-time highs before forming this double top, which then led to this breakdown below this ascending wedge. So, as I was saying yesterday, there's a clearly defined horizontal support area here at 71.80. If you're looking at this instrument, I'm looking now the NAS 100, and below that there is like really a pocket of thin air. I mean, there is some type of a support roughly at 69.70, but you know, the chances that we're gonna accelerate and go all the way back down to the beginning of the wedge, as anyhow the theory says about wedges, the chances increase substantially. Now, we had our friend asking about the IWM, and the IWM has tested for second consecutive day yesterday this confluence of supports, previous resistance, current support, extremely important area. 200 daily moving average, previous double top, third time worked as resistance even for 2 days, then it acted once as support. So this area has already proven its importance. Definitely, I'm absolutely sure there are several stops below this area, and the 200 DMA has actually converged and is exactly at this level as well. So the things are very simple. If you want to be bullish, this is the place you're buying. You know where you're wrong. But if we do break below this level, I think there is a lot more downside coming for the IWM. Okay, first area of resistance, in case we get a rebound from here, is going to be at 164.30. Now, Nikkei.
Yes, Steve, I was about to say, our friend Glenn is asking for the Nikkei, so very good. Good timing.
I'm probably, a mind reader or whatever.
Nostravology, yes.
Yeah.
Oh, and guys, I figured out what position I should play in our baseball team. Left field, because most people always say, Dale, you're in left field. You're out in left field. You know what I mean? So, all right. Great review so far, Steve.
Thank you. So, Nikkei, breaking to 27-year-old highs, and striving for a couple of days to hold that level, collapsing after that. Obviously not a very good sign for the bulls. So it's all about the 23,000 area once again. So 23,000 area proved to be a very hard area of resistance. It was very tough to crack through it. So there is a significant chance that we'll act as support once we get back down there. Now, if we actually do get back down there and we break through it, that's going to be an extremely bearish signal, And there is going to be the chance that a lot of people got trapped at the very wrong timing in Nikkei. So, the huge danger. But we're not there yet. If 23,000 holds, there is no real big technical damage done to the index. But I'm pretty sure that there are already several people that have started sweating about it. Now, the people that are sweating more than anybody else, undoubtedly, are the people that are long the DAX. Because the DAX, after making like a decently impressive recovery from this horizontal support area, it even made, it plunged even more impressively than the V-shaped recovery. And earlier today, we actually came at 11,810. I've said many times, this is a textbook head and shoulders formation of massive proportions. It's a head and shoulders formation that the market has been building since February 2017. In essence, this is a 1.5 year head and shoulders formation, very decent symmetry between the two shoulders, very clearly defined head, We're back down at the neckline. In all honesty, I think that if we decisively break and close below 11,800, there is going to be a massive exodus, a massive run for the doors, and that might actually create an impressive collapse of the index. So, you know, once again, you want to be long the DAX, this is the place and time that you do it, because you know where you're wrong. But if we do break below 11,800, you know, I doubt that, you know, there's going to be much of a possibility to see something different, because the whole market is watching at this. And as I said, I bet a lot of people are just going to say, okay, get me out of this if they're long, because, you know, this is huge, right? And I haven't even calculated the target, but roughly speaking, 11,800 to, let's say, 13,600. So we're talking about 800 handles of a target to the downside. So we're talking, yeah, so it's, oh, sorry, I'm sorry, you know, that's stupid, actually maths, because I forgot 1,000 really. So yeah, it's 1,800. So we're talking about a target of 10,000. So the target is down here. So, you know, there is a huge, huge potential for more downside. So, you know, very tough situation here for the DAX. And, you know, today seems to be a critical day once again. We're seeing a small rebound so far, but, you know, it is what it is. Now, FTSE, I expected one more low. What I didn't expect was that V-shaped recovery before we actually got one more low. So, you know, that was quite a tough market to trade, because I expected like a, you know, like a soft rebound before seeing a new low. Oppositely, we got like a V-shaped rebound. We even broke above the previous area of support. I guess a lot of people started getting trapped being long up here, and then the market simply collapsed lower. Next area of support is down at 7,100. You know, the price action looks quite ugly at the moment. So, you know, no real sign of a reversal yet, right? So, 7,073 is a 78.6, 7,100 horizontal area. I would expect some kind of a reaction from there, but let's first see what kind of a reaction we're going to get from those levels. Now, Shanghai Composite, we were monitoring this as a descending wedge. We actually broke above it, but, you know, this breakout has definitely now lost momentum. We got like a very bearish, we gapped down and we got a very bearish candle. Still, there is the possibility that, you know, this resistance might act as support and, you know, get another leg to the upside. But, you know, we should obviously be somewhat careful here. The FXI also, the FXI actually never confirmed like a big reversal, because as you see, the FXI kept consolidating, definitely not in a bullish manner. So, you know, I would still be quite careful with that. And since it's you know, with the recent developments in Italy, I decided, you know, to have a look at what the MIB is doing, the Italian index. As you see, you know, we had a clear, look at this, we had a clear move higher, which started losing momentum. This was a huge trap here, because we actually saw an acceleration higher, and you know, this looked like a very bullish development, and then we got like a huge leg down, textbook triangle, another leg down, a rebound more or less to retest the broken triangles support, and now we're headed down again. We are currently testing the 50% fib. Doesn't look that healthy, I have to tell you that much. Now, let me erase the drawing and zoom out, so you can see that if we actually go on a weekly, you can see that unfortunately for our Italian friends, if you look at the big picture, this whole price action looks like a bearish consolidation, a bearish long-term consolidation, because we had a clearly impulsive move lower, and we've spent all these years since the financial crisis in some choppy overlapping price action. So, you know, whenever the next recession comes, which, you know, shouldn't take that long, I'm afraid that there is more downside coming for the MIB. Obviously, the level to monitor is, the trend line to monitor actually is this ascending trend line support. So this is like a view on the Italian index as well for those that are interested. Now, let's go and have a look at the bonds. Stelio, any questions, any relevant questions?
Yes, did you look at the Dow? Because we've been asked that. I was away for 2 minutes, so I don't know if you did see it or not. I don't think you did.
Oh,
our friend Chetan is asking for the Dow. Oh, and Greg is here, so maybe.
Yes, I'm here.
Hey.
Oh, welcome. Okay, fast comment about the Dow.
I was just driving. Yes.
Yeah, fast comment about the Dow. I'm seeing a potential ascending wedge breaking down, although I don't see any momentum yet. One thing is for sure, the Dow seems to be, after a decently long period of underperformance, the Dow recently seems to be overperforming some of the other US indices. But I don't want to bleed, you know, anymore through Gregor's time here, since Gregor isn't every day with us. So Gregor, let me pass you the screen. There you go, my friend.
Dazzle us, wizard.
And I'm looking forward to see what you have for us.
The Wizard of Waves, Gregor Horvat, is in the house.
Yeah, always. Always charting. Okay, so
go ahead.
The S&P 500 came definitely very nicely from the highs, but I see that market actually slowed down at this old high from the start of the year. So actually that still can be part of an uptrend that I'm tracking for wave C, which means a 5-wave movement can still be reaching higher prices, especially as long as we are trading above this trend line support. Okay, so clearly I think that turning bearish here would be soon, but definitely it can be the case. But in such case, I would have to see an invalidation level broken here at 27.90. So only then I would say that top is in place and that we are going to see lower prices. Now looking at Nasdaq 100, also this can be actually a flat correction. But what is probably the most important when I'm looking at this price chart is that we have a very clean 5-wave drop from that new high. Okay, it was 1, 2, extended wave 3, wave 4, wave 5. So even if you assume the top has been in place because of very strong bearish flag and that we are going to see much lower prices, there's
going to be rebound first.
Yes, a pullback at least in 3 waves. So I'm looking for reversal in the next 24 to 48 hours back to 74.29, maybe even 75.20. But if we're starting to see this reversal, this bounce in 5-wave movement, which means an impulsive reaction, then this definitely would suggest that this whole structure down from start of September was actually really a flat correction. Okay, so we'll see how this market will actually, what kind of a bounce will form, but definitely I think that this fall can be retraced much more than just 100 points here on Nasdaq 100. So definitely consider to see some kind of a recovery. Also on German DAX, if we review this longer term cycle, I still think that this is wave 4 correction. So it's part of an ongoing uptrend. which means that I will be anticipating a new continuation higher. But firstly, this wave 4 should complete itself. It can either be a wave 4 triangle still, as long as we are trading above March lows, or it's going to be a deep free wave retracement for wave 4. But both patterns are still ongoing, unfinished, which means you really have to be patient here, especially if you are interested in long.
Grega, from a different approach, we said the same things. I said that the vast majority of the indices are currently at very critical stages.
Yeah.
If somebody long, this is the place they have to be long. But if we actually breach through the critical supports that many indices are sitting on currently, then the situation changes completely from a technical perspective.
Yeah, I mean, the only thing that worries me is about the current situation that I just described, that we may see a new bounce from here, from on the S&P 500 and maybe Nasdaq, is Nikkei. Okay, so if I look at Nikkei,
very nasty false break to 27-year-old highs, eh?
Yes, and it actually has a very aggressive sell-off from that new high.
Mm-hmm.
Okay, so if we imagine that maybe Nikkei is already going to see lower prices, then we really should consider that sooner or later the S&P 500 will be also
roll over as well. Yeah.
Yes, but maybe this will happen after we see maybe a pullback here on Nikkei and the S&P 500 reaches maybe still a final high. But everything suggests that, as you said, that it's a very critical time, especially now. So Japanese yen, I think that Japanese yen with the Nikkei could still see more gains against the US dollar. So overall, I think I would not be surprised actually to see some risk of sentiment going forward.
On one way or another, I think that we are getting closer to some event in the markets that will start getting things very interesting. Definitely before the year is over. Definitely. That's I feel it in my bones. You know what I mean?
Yes. Maybe I can also make a deep review. Yesterday I put a PIP in play for dollar yen. Okay. I received some questions why I went dollar yen short, and I will give you just a quick review. So the first thing was that we had a very bearish candlestick doji pattern here at the top, right? So clearly this was an evidence that we are failing once more here around 114 level. The next thing was that we have been turning down from 61.8% retracement of actually projection measured of wave A. Okay, so it was a signal that after all maybe wave C can be finished here. The next thing is that on the 4-hour chart we had a 5 waves to the upside following the recent break below this trend line support, which occurred yesterday right there at 113.70. The next thing is I will also show you 10-year US note. The next thing is also, of course, Nikkei, which already has been turning down very aggressively from a new high. So as you know, if Nikkei will see lower prices, then of course dollar yen may follow. So this was another evidence why dollar yen could be pulled to the downside. And the next thing is that 10-year US note has 5 waves of decline. Now imagine if we still see now a reversal in 3 waves, which is what I expect, then dollar yen can be much lower if we consider that it's already very weak now. Okay, so this is another reason why dollar yen could actually see more downside. The next thing is also just let me find this. The COT data, I think that I also posted this one on Twitter. Just let me find.
Yeah, the DSI was also extremely bearish again a few days ago, like extremely bearish. I mean, sentiment was extremely bearish again.
Yes, extremely. So actually, that's Japanese yen COT data, and you can see that sentiment, as you said, on Japanese yen went extremely bearish, right?
Mm-hmm.
And something similar has occurred a few times in the last.
And we've seen a rebound.
Yes,
yeah.
Exactly. So we had a lot of different from
You gave us
a lot of different analyses that suggest that Japanese.
You gave us
rebound.
Let me give you one more. Go back to the candlestick, to the weekly candlestick chart.
Okay, just a second. Here.
Okay, zoom in. If we close a little bit lower, or we close near the lows of this candle, we also get an evening star formation on the weekly, right? So
yes, that would be very aggressive.
Yeah, a little bit more weakness by the end of the week in the USD yen, and that's a weekly evening star formation. So that's evening star formations and morning star formations, probably the most reliable reversal candlestick patterns. So that's another thing to monitor.
Absolutely agree. And also we had on an intraday chart yesterday, we had this very head and shoulder top formation. So I mean, it was,
I saw that yesterday, and that's why I said that a likely rebound towards the neckline, towards 113.50. I said it before you were here, is a very good selling opportunity in the short term. That's exactly what I said before.
Yes, but we have on the short term still, from an Elliott wave perspective at least, I will have to be very careful. We are now some kind of a very slow price action here. It can be a triangle here for a wave 4, but still, if we start seeing recovery, especially in line with this S&P 500 and Nasdaq chart, which suggests that we may see at least a temporary corrective bounce, and if dollar yen will follow the same path here and bring us back above 113.55 level, then of course I will have to consider that we are going to see another maybe final push to the upside and then turn lower. But again, as intermarket analysis suggests, I think that in the next few days, maybe a few weeks, we will start to see maybe a Japanese yen be a little bit stronger than it's right now, at least against the US dollar. Also, I see dollar index still trading at a very interesting resistance. So this one starting to coming down, while euro dollar could be stabilized here around 1.14. I really think that this could be the case to see stronger yen against the dollar in upcoming days and weeks.
Let me see, Grega, if we have some question for you.
Maybe I can also update on gold. I have been looking for a push to the upside in wave C. I thought that we will see a continuation higher already yesterday or today, but simply prices, as you can see, retraced back to this below 1190 level actually. So maybe we'll see a retest of this 28 September lows once again, but still I think that this is a corrective countertrend pullback, and that we'll see sooner or later wave C that will take us to higher prices. But maybe
I'm pretty sure that the bulls have already started capitulating.
Yeah, I mean.
Yeah. Okay. Cool. Anything else? Anything else? I think we have one more minute. Coach, is your guest here?
Yes, she is, and she's one of my favorites. Elba Corral is with us.
Okay, that's perfect.
From Spain.
Any other last instrument you want to talk about, Grega, before Coach starts his interview?
No, not really. It's
okay.
I mean, I will join again in the upcoming days, so I will update you.
Thank you for joining us. Thank you all. See you tomorrow. Enjoy the interview.
Thank you, Grega. Thank you, Steve. Thank you, Elias. All right, guys. stick around for Alba Corral. Her calls have been amazing every time she's been here. So I like her demeanor, but her work is even better. Alba, I just passed you the controls. Welcome back to FACE.
Hello, Dale.
Hi, Alba. How are you?
Hi, fine. Thank you. And you?
I'm fine. It's great to have my Trading Warrior sister back here in FACE with us. And, you know, I did promo the interview because your accuracy on your forecast on the prior two interviews has been outstanding. So I'm really interested in what you have to say today. So why don't we just get into it? So what are we looking? We're looking at the Aussie. That was something from the last webinar. You were looking for a big decline, and it manifested in spades.
Yeah.
So how
yeah,
now?
and I think it has not finished yet. I'm going to talk to you about that. I agree with most of the things Stilio said, and also Grega, the wizard of waves, that you call him.
Yes, yeah, he is.
And okay, let's begin with some Forex, and then I will end with the indexes, with your indexes, with Wall Street, and also the Aussie, yeah. The bearish movements, I think it's not finished. Many people has trading buys over here because of the divergences with the MACD, for example, oscillator, or the RSI.
Yeah.
But I think if
those dumb indicators, better off trading naked. What do you think?
I think the process structure naked, it gives you a lot of information. You can mark all the resistances, the supports. It's important. But if you put some indicators that are useful for you, you are taking that point of quality to your trading. It can help you. It can improve your trading.
Okay. I believe
I do not use a lot, but some of them, yeah.
It looks like mainly moving averages and the is that the MACD and the MACD now?
So I was saying the bearish movement seems to be finished over here, but I think it's going to be a little more down because of this chartist figure. It's a wedge, a bearish wedge, because
so it hasn't met the objective yet.
Yeah, this is the shortest projection, but if we join
interesting,
the bottoms over here, we have
a deeper move,
a little more, deeper move. That it's very weird. If the movement ends here, it's very weird that the Aussie dollar bounced here, and also.
So that's about 69.20 if we take the larger magnitude decline.
The support, the minimum, is here.
Okay.
So we have to consider the movement to end there.
Okay.
But this support, it's also a great support, a great weekly support that begins here. So I think the Aussie with this trend line that it's aggressive will end, I don't know when. It can go up, but with lower highs until here, until 0.6914 or 69.20. Okay, I think this will be the bottom and the area where we can expect a higher movement, a strongest movement. Okay, if we are looking for a bounce. So if anyone is thinking of buy Aussie, and he wants to buy it because right now it has a bullish divergence, for example, I recommend, I don't know if I can draw here. Yeah. Okay. I cannot draw but it's okay. Do you see my?
Yeah, we see your cursor.
Okay. Until the Aussie doesn't overpass this maximum, for me, the longs are not confirmed. When you have a divergence, and we will see this pattern in the next charts, when we have a divergence, you can open longs here. They are risky ones, but the divergence works if it bounces the price and pushes higher than the previous maximum. Otherwise, it goes down and down and down in its weakness. So that's why I'm not thinking of opening longs right now on Aussie, in Aussie. And I see the target a little bit below here, okay?
Okay, great.
If anyone has any question, you can tell me. Okay.
Any questions on Aussie? Any questions on Aussie, anyone? Going once, going twice? Okay, continue, Alba.
Thank you. We have here the euro yen. This is a very crazy area because it has various impulses, bullish, and I have a figure here, a pattern that I work, that it's called the wolf wave.
Oh,
it
yes.
was a bullish one. I cannot draw, and I don't know why. 1 second. No, it doesn't allows me to draw. So I'll paint it like this. We had a bullish one, and now we have a bearish one with this latest maximum. This is the first target, and the second target is more or less over 127, more or less. So there are 200 pips down. So right now, going short is a little bit risky because of this movement. It's very clean, and I will wait for lower highs below this moving averages if possible.
About
I
130
reject over here.
Mm-hmm.
This is the first target, and the second target is over here, more or less. Okay. So I think the Eurogen in the short medium term is going to be down, and I will take shorts if the price rejects or the moving averages or any Fibonacci area over here. It concludes the 61.8 with the 50 moving average. So a reject in this area will be good for shorts in the Eurogen if it doesn't go down right now like crazy, because this impulse is
so looking to sell a rally for second objectives to be achieved later on. Mm-hmm. Where's that white line come in, and what kind of moving average is that, Elba?
This is the 200 simple moving average.
Okay.
It's for me, it's a reference. And this is the 50 exponential moving average. The 51, it's a little bit nervous, and it adjusts a little bit more. And the 200, is the 200 simple moving average. So this is for the Eurogem, go like this. And the USD gem, well, I have here directly I was listening to Stelios, I think, with Grega, telling him that put the chart into weekly and to see the pattern, the evening doji star. Right now, I have another wolf wave here. Last week, I thought the end of the movement of this wolf wave, the 0.5 of the reject, will end here. But it rejected, gave us 50 pips and bounced again. So right now, this was the next resistance, and the reject now is done. So I will look for all these price structures to take benefits, close partially the position, but these 4 squares are the targets for me for this figure, the wolf wave, the bearish wolf wave, for the USD yen.
Okay, great. Will you feel more confident about it since last time it bounced right off that triangle line it broke out of? Will you feel more confident? Because I have a return line.
I will feel more confident
if it gets back underneath. It gets back underneath that line.
Mm-hmm. We have obstacles.
Yeah.
Yeah, this is a sport right now, but as Delio said, we need the price to break it, and maybe not to leave the evening doji star, but if it close the price below this support, it would be great. We have here the trend line. It's not a strong support.
That's what I'm asking. It would. You feel more confident if we were underneath when we get underneath the trend line.
I'm comfortable right now if the price rejects or turns back below 114. So here is a good area. Risky. All the wolf waves are risky patterns. They are against trend. But again, if the USD yen bounces here because of the support, a reject over here in this area would be great to take again shorts, to enter short again. I've calculated 4 targets. 4 bearish targets. It ends in 108.50 more or less.
Yes.
Okay. I go into EuroCAD and USD CAD. Also, we have huge figures. Not this one. In EuroCAD, we worked a bearish Fibonacci because of this bearish wolf wave. Also, if I have a bearish pattern, I like to combine it with other figures in the direction of the wolf wave. So below, for example, this 50 moving average, for me, any lower high is for shorts. And now the movement can end here, but we have in weekly the 200 moving average here. So I think the movement, if we open a short right now below this area, below 1.533, if the price goes up and then goes down, I think the target will be here, 1.4674, 46.7, because of another wolf wave. Again, I throw Fibonacci according to the latest bearish impulse, because we are also below the moving averages. And for USD CAD, I have a similar pattern, but this area is more complicated for the USD CAD. Another wolf wave, a huge one in daily. It has served me to open shorts, but we have reached in the daily chart the 200 moving average is a strong support. Now the price it has bounced until the 50 moving average, and this is the key area because of the 200 moving average in weekly. I'm waiting for the weekly close, because you see this doji.
Yeah, right there.
Yeah, it rejected the 200 moving average. The price went down, and now for me it's testing. It's testing this moving average, and if the price at the closing bell this Friday 12, it's down here, it's a good sign for me to reopen shorts. And also this area is good. Now here, it's testing the 61.8 yesterday. It gave us a big shadow and a reject. And I was testing also. It's complicated because it has a 50 moving average. So in weekly, we cannot open trades short according to Fibonacci. But I think if we look at on Friday, at the end of the week, what happened with this one, that would be great if it closed the price below here.
Okay.
Otherwise, we will wait for another reject in the price structure areas. For example, over here. But right now, the fight is here, and the area is more complicated than the EuroCAD. And I don't know if you want me to see any other pair. I'm going to talk to finish.
You wanted to wrap with the indexes. Oh, euro?
Yeah, euro dollar.
Okay.
Because if it's euro dollar and DAX index has a strong negative correlation, and now the euro dollar is doing the same as the DAX index. It's this correlation. I don't know how to say it. It's or the DAX index or euro dollar is like
the DAX is weaker than the euro.
The DAX index,
USD.
yeah, not weaker, but if we to compare two charts,
yeah,
we can.
But they have similar patterns, is what you're saying. They're following each other.
Yeah, right now, but normally when the DAX goes up, the euro goes down, and now the DAX is going down and the euro is going down as well. We have an indicator that can compare them. You can put here.
Well, there's probably more euro traders in our audience than I know there are DAX traders. So you remain bearish euro USD.
No, I'm telling you that I don't know what to do with euro right now because normally the correlation is like a mirror. When the DAX goes up, the euro goes down. But from this day on, from in daily not, but in 4 hours, you see that every movement is being replied like the same, no? And it or the DAX index or the euro is lying. So if I'm not sure,
I know what you're trying to say. The correlation is broke down. It's not correlating the way it normally does. So so you don't know what to do with the euro because the correlation
with the euro dollar, because I know what to do with DAX because I know it's weaker in Europe. We have weaker movements. We have more various movements than USA, and I have various pattern. I had various wolf waves over here, and I traded shorts in DAX, but not in euro dollar. I'll wait for the euro dollar to, I don't know.
You know, Alba, I was thinking about it, going back to your US dollar yen forecast. You know, all the big news over the last week or so has been what about yields, higher yields in the US, 14-year highs and the 10-year 320 something. But if your yen forecast is correct, with even a shot towards 108, that to me would portend that yields are going to drop again.
If you want, we can talk about it now.
Let's talk for about 5 hours today. I have many questions. I'm kidding you.
Yeah,
I am.
You're always kidding.
I know, I'm just a jokester, but I am interested in your look in the indexes.
I'm looking for. What do you want to start with Nasdaq, for example?
Okay.
Let's see Nasdaq. I remember the last time I talked with you. that we were looking for a very smooth movement in the Dow Jones because of the bar pattern. Let's see it later. Right now we have the Nasdaq, which is the strength. It has a clean bullish channel, but right now there is a difference between this breakout and the others. This one, I don't know if somebody has said, but it's a double top figure. And a double top figure is not only a test of a resistance, it's not a top. It has some things that are particularly from the double top, which are the proportion between the two peaks or the two mountains, and also in this part, a strong bearish movement, huge candles, also with gaps. Right now, I need to paint it here like this because the GoToMeeting doesn't allow me to paint.
You're an artist. I'm
an artist, yeah.
Look at how you're a technical artist. Okay.
So the double top, the proportion between the two triangles or the two mountains, the strong bearish movement in the right part, and now it has broken the base. So any bearish movement below these moving averages and more below this, now it's kind of resistance. It will be a good chance to open new shorts because we have the technical projection more or less over here. And now in this case, this double top, the price, it's like this, and the
so the target is around 7,000. This is the Nasdaq 100.
And a bearish divergence support this movement. So this is the difference between this one and the previous ones.
Okay. Okay, that's a pearl to know, because everyone's out there. Oh yeah, we've had these 2-3 day events before, and then 2 weeks later the market's at new highs.
Well,
you're saying that
it can be, but as I said, like the Aussie, it's weird. The price bounce over here. It can bounce in the price structure, but if it makes lower highs, I will put shorts.
Okay.
And for Dow Jones, Dow Jones.
That's recently been the strength. The Nasdaq and the Dow charts look a lot different, don't they?
Mm-hmm.
Okay.
I have here a huge bearish wolf wave.
Oh wow! Look at those.
A huge one.
Yeah.
Right now.
Okay.
I'm trading right now another one. It's smaller, but the key for the Dow Jones right now is to break this 200 moving average. Again, it bounces in the 200 moving average, and it's fighting below the 50 moving average. Again, any lower high or any reject in this area, for me, it's great to open new shorts. We have also divergence in these two last peaks.
Yeah.
The price goes up and the oscillator goes down. So it's critical with this divergence for the price to break these minimums. Okay. Otherwise, I will not be so comfortable with shorts. I have them protected at break even plus 30 points right now, but until it. So we have the two targets here. They are huge targets. I do not pretend. Pretend is not the word. I'm not saying the people to open shorts right now with these targets. They are huge. This is a big swing trade. But to manage the position, if the price breaks the 200 moving average and close partially in the supports, well, let's see if the advance of the price.
Yeah.
But I think the best possibility right now it's advancing. The last time we talked about the bear pattern over here, the bar pattern. You remember?
That's right. I do.
And the price went down until the leading trend line, which was this one, and conclude with the 200 moving average. Right now we have more way to go. But we need to break this 200 moving average in 4 hours. It's very, very important.
Critical. Wow, Alba, you did it again.
I have a little present with a stock of the Nasdaq, but I don't know if you want me to say it.
Go ahead.
I don't want, if somebody has is trading this stock, but it has, yeah, I have here the chart, as you said, this National Beverage Corporation, and our indicators has given a better signal. This signal can push lower the price.
Yes.
And if we put the chart like this, I don't know if you see, like the double top of the Nasdaq, we have here the first mountain and the second mountain, which is proportional in time and in size. So maybe National Beverage Corporation, if it respects this trend line, if it makes lower highs below $116.72, maybe it would fall down and down. We have here price structures, supports over here in $95.89, $86. These are areas to take the money to make to close partial the positions if we can. But right now, I think that National Beverage Corporation, if the Nasdaq continues with the projection of its double top, this stock will go after it. So.
Okay. Well, you know, you keep bringing up mountains. It makes me think of The Sound of Music. Climb every mountain, forge every stream, follow every highway. All right. Anyway, Alba, great presentation.
Thank you.
Thank you for letting Thank you for letting me serenade you. And what do you have a website now, or any kind of business model for people to follow you? Is it just through Twitter, or what's the best way for people to keep in touch with your excellent work?
For example, in the bearish pattern I've just commented in beverage, this is the Twitter of the project of our works with these indicators. These are Tradingmatic. This is my personal Twitter. It's at Albitamix, as you said before.
Right.
And in this blog, underthewolf.wordpress.com, I have
I see you on there, some of your recordings.
English post also about the wolf waves. And also, if you want to read another post and it's in Spanish, you can translate it. So if anyone is interested in the wolf wave as a figure, they can come here and study all the posts. And any doubt or anything, they can write me an email here, bolsaestadistica@gmail.com. And that's it.
Thank you so much, Alba, for being with us and sharing some great looks and your excellent work. You're definitely a pro.
Thank you, Dale, for inviting me the third time. And I'm glad to be your favorite, one of your favorites.
So I really had a great time. You know, compelling looks and analysis and some fun. I think it's a great combo.
different tools and the Stelios and all your team, we are seeing the market the same way with different tools. I think that's the most interesting thing, because your subscribers and all the people that you help to learn every day, they can decide what to use, or they can decide what kind of trade or what style it will be more comfortable for them.
Yeah, it's very powerful when different methodologies come together looking for the same outcomes.
Yes.
So,
yes.
So, you know, great. You know, I never heard of Wolf Wave before you. So, you know what? Every time you're here, Alba, we learn from you. So thank you for your time today, and may pips rain down on you and everyone you work with during this fall trading season. And let's get back together again this winter.
Okay, perfect.
All right. All right.
Thank you, Dave. Goodbye. Right. Goodbye, everyone.
Goodbye. Goodbye, Alba. Oh, you're welcome, Tom. I'm glad you enjoyed her. And we are getting a little bit of a turn in the dollar here. A little bit of 96.03. We're talking about it about 10 points ago. And let me see here. Dale Pinkert, here I am. Thank you again. Just to show my screen. So we're getting a little bit of a reversal in the Dixie for turnaround Tuesday. So there's your 4-hour candle. So you could take partials, put stops over the high of the move, and I did the same thing in Euro. We'll see the 4-hour divergence is holding. I want to thank Alba for showing her great work today, and I hope we're adding value to what you're trying to accomplish as a trader. But don't forget, I mean it, man. Don't forget. Don't just count your pips, count your blessings. See everyone tomorrow. Adios.